Picture this. Wall Street's major indices hitting new all-time highs, only to see stock futures barely budge as traders worldwide hold their breath for the Federal Reserve's pivotal interest rate announcement. It's a moment of high-stakes anticipation that could shape the economic landscape, then it's got everyone talking. But here's where it gets controversial. Will Jerome Powell's words lean toward a more cautious approach, potentially cooling off the market's fiery momentum? Stick around as we dive into the details and uncover what this means for investors like you. On Tuesday evening, following a day of historic gains for the major stock averages, U.S. stock futures showed minimal movement as the financial world tuned in for Wednesday's Federal Reserve interest rate decision. To put it simply for beginners, stock futures are essentially bets on where the market will open the next day, giving us a sneak peek into investor sentiment before the actual trading bell rings. Breaking it down, Dow Jones Industrial Average futures dipped by 33 points, which is just 0.07% lower. Meanwhile, S&P 500 futures stayed flat, and NASDAQ 100 futures edged up by a tiny 0.02%. This subtle shift came on the heels of another day of record-breaking performance. The S&P 500 climbed 0.2%, surpassing 6,900 for the first time ever during intraday trading and inching closer to that psychological milestone of 7,000. The Dow Jones Industrial Average added 162 points, or 0.3%, while the NASDAQ Composite led the charge with a 0.8% advance. It's like the market is on a roll, but with the Fed's meeting looming, everyone is playing it cautiously. Investors are optimistic that the stock rally can weather a series of upcoming challenges this week. The Federal Reserve is almost universally expected to lower interest rates by a 0.25 percentage point when it wraps up its meeting on Wednesday. For those new to this, think of interest rate cuts as the Fed essentially making borrowing cheaper, which can boost spending and investing, kind of like a financial pep talk to keep the economy humming. However, the big question mark hangs on whether Fed Chair Jerome Powell will adopt a dovish or easygoing tone in his remarks afterward. Many in the market are banking on another cut in December, setting the stage for continued upward momentum. But here's the part most people miss, and it's sparking debate. The so-called Magnificent Seven tech giants, those powerhouse companies dominating headlines, are gearing up to report earnings this week. These behemoths, including Alphabet, Meta Platforms, and Microsoft, set to release after the close on Wednesday, followed by Apple and Amazon on Thursday, are ramping up investments in data centers. Yet, if their results disappoint, say with lower-than-expected profits, it could send ripples through the entire market. Imagine the ripple effect. Big tech drives so much of the gains, so a stumble here might feel like pulling the rug out from under everyone's feet. Analysts are warning not to underestimate their impact, and this is where opinions diverge. Should investors be wary of over-reliance on these few stocks, or is it just smart diversification in action? We'd love to hear your take in the comments. On the geopolitical front, trade tensions between the U.S. and China seem to be easing after recent developments over the weekend, providing a welcome breather for the markets. Investors are now eagerly awaiting the outcomes of a high-profile meeting between President Donald Trump and Chinese President Xi Jinping in South Korea. This thawing of relations acted as a key catalyst for Tuesday's gains, as Thierry Wisman, global FX and rates strategist at Macquarie Group, explained. He noted that the market views President Trump's renewed global engagement with China and Japan as a positive force that might curb his appetite for additional tariffs. The market is seeing President Trump re-engaging with the rest of the world again, i.e. China and Japan, and this is a good thing insofar as it may temper his desire for more tariffs, Wisman said. The prospect of seeing very high tariffs, especially on China, have diminished. To some extent, this also plays to the prospect that the Fed will be dovish too, given there is a connection between lower tariffs and lower inflation. In other words, fewer tariffs could mean less pressure on prices, making the Fed more comfortable with rate cuts, a domino effect that's intriguing, to say the least. Of course, not everything is smooth sailing. Sky-high stock valuations and an ongoing government shutdown remain potential pitfalls, even as the market sits at all-time highs. Experts caution against betting against this bullish trend, as detailed in a recent CNBC piece. https www.cnbc.com/2527 Wall Street trading desks turn bullish, saying not to bet against big tech earnings rate cut. I anticipate that we're going to continue to see enthusiasm as we go through this week, said Lauren Goodwin, chief market strategist at New York Life Investments, during CNBC's Closing Bell. https www.cnbc.com/closingbell. On Tuesday, she added, I think through the end of the year we're free and clear. It's a confident outlook, but is it overly optimistic? Some might argue that ignoring these risks is risky business. After all, markets can turn on a dime. What do you think? Are analysts being too bullish, or is caution just overblown? CNBC's Pia Singh contributed to this report. 1 hour ago, markets are pricing in a quarter-point cut with near certainty. Financial markets are currently assigning a 99.5% probability to a quarter-point interest rate reduction at the end of the Federal Reserve's Wednesday meeting, based on data from the CME FedWatch tool, https://market/interest rates/CME FedWatch tool. This would adjust the target federal funds rate to a range of 3.75% to 4.00%. For context, this tool helps traders gauge the likelihood of rate changes, making it easier to understand why confidence is so high right now. Sarah Min. 2 hours ago, stocks making the biggest moves after hours. Let's spotlight the companies grabbing attention in after-hours trading, a time when news can really move the needle. Visa, https://.com/v. Shares jumped 1% following its fourth quarter earnings report, which beat expectations on both earnings and revenue. The company achieved adjusted quarterly earnings of $2.98 per share against $10.72 billion in revenue. Experts polled by LSEG had forecasted $2.97 per share on $10.61 billion in revenue, so this slight over-delivery is a win for shareholders. Seagate Technology, https://www.cnbc.com/quote/stacks. Shares surged over 4% after delivering robust results for its fiscal first quarter. On an adjusted basis, it reported $2.61 per share in earnings, from $2.63 billion in revenue. LSEG analysts had predicted $2.37 per share on $2.55 billion in revenue, highlighting stronger than anticipated performance in the data storage sector. Dive into the full list of movers here. CNBC.com/2025-1028 stocks making the biggest moves after hours. VSTX-CZR-MDLZ.html. Sarah Min. 2 hours ago, stock futures open little changed. As Tuesday evening unfolded, stock futures kicked off with minimal shifts from the previous close. Dow Jones Industrial Average futures declined by 29 points, or 0.06%. SP 500 futures and NASDAQ 100 futures both rose modestly, by 0.02% and 0.04% respectively. It's a quiet start, but one that underscores the watchful wait for tomorrow's Fed news. Sarah Min. With so much riding on the Fed's decision and earnings from tech titans, the market's future feels like a high-wire act. Do you believe Powell will keep the dovish stance alive, or is a shift to hawkishness on the horizon? And what about those trade talks? Will they truly lessen tariff fears, or are we setting ourselves up for disappointment? Share your predictions and opinions in the comments below. Let's discuss.